David, thanks so much for your time.
Pleasure.
Now, our colleague has just noted the booting out potentially of Hammerson from the FTSE 100 amid concerns that investors there have of the property environment in the UK. Perhaps you can tell us your sentiments about that?
Yeah, he's right. We looks like we'll be leaving the FTSE 100. Of course, the ironic thing is that when we conclude this transaction, we will go back into the FTSE 100. So we think this is quite a temporary effect. We think that what has happened over the last few months is that the general malaise around UK equity markets has weighed down on our share price. At the same time, asset-owning companies, because of the threat of increased interest rates, has started to weigh down on retail and property companies, but also this malaise around retail. The retailer environment is also having that effect. So we've had a difficult few months in share price. I would recognise that, and the frustration is that we'll be leaving the FTSE 100, but as I say, we think we'll be back.
So you'll be back. But, I mean, there's a real concern around Brexit because so far the headlines that we are reading is that divorce is skewed in favour of the European Union and not the UK.
Well, I think no one knows what the outcome will be. What is happening at the moment is both sides are putting their own negotiating position forward. I don't think that we can conclude one way or the other which way this will go. I think what is important to remember, UK has one of the lowest rates of unemployment in Europe. It still has a very healthy GDP growth in the high 1.7, 1.8% growth. So the country structurally is in a sound position. If you look at our business, because of course everyone then thinks about the consumer and the retailer environment, what is very clear is that with our very prime retail portfolio, which we'll be doubling up on with the acquisition of Intu, we are seeing record levels, and I say that again, record levels of leasing demand for our space. We've got the highest level of occupancy in our portfolio in 17 years. So whilst the environment is tough, we are performing very well against that backdrop.
All right, so talk to us about that merger with Intu. Where are we now? What still needs to be done?
So we announced it in early December. We've seen about 80% of our shareholders, and we've had very positive meetings with those shareholders. We'll be releasing documentation for the acquisition during the month of March, and then we'll be seeking shareholder approval on both sides in the month of April. Now, at the same time, we have a CMA inquiry, that's the Competition and Markets Authority, looking at this acquisition. We always knew they would, and we anticipate them giving their final decision towards the end of this year. So, regrettably, it's quite a protracted ultimately coming together, but we're very confident we'll see it through.
I mean, David, apart from Hammerson being booted out of the FTSE 100, we've had the Resilient Property Group that's also been kicked out of the top 40 index here. And Hammerson does have exposure, or Resilient rather, has exposure to Hammerson, and then there's Nepi Rockcastle, which also owns a stake in you. I mean, talk to us about the selling that we've seen in the Resilient Property Group and how you've been affected.
Well, that's really for them. I mean, they are a small shareholder, below 3%, so in terms, our belief is this has a very modest impact on our group. You know, what's more important is that those more macro effects that I've said at the beginning of this interview, that's really what's hit the share price. But I believe we get the vote through in the next month, which I'm very confident about. We're continuing to sell properties, so we acknowledge that we need to just reduce our leverage a bit. So that's an effect that we'll push through over the next few months. In the first couple of the months, we've sold £100 million worth of property at book value. So I think the catalysts are get the vote through, continue to sell properties, and I think then investors and the market more generally will see how undervalued Hammerson shares are currently.
So the selling in that stable hasn't really affected you negatively. But as a shareholder of Hammerson, I mean, you must be concerned at some of the headlines you've been reading about possible malpractice at the company. I'm talking about the Resilient Property Group.
No, I mean, look, this is a shareholder. It really has no impact on Hammerson. You know, I have high regard for that company, but it really has no impact on our business. They're a very small shareholder, and we have many shareholders around the world, and that really is no concern of us.
Okay. So no concern. But otherwise, perhaps you can just give us some final thoughts regarding Hammerson's future going forward, especially as we we'll have to wait rather for a long time for the potential merger with Intu to be sealed. What's in store for shareholders in that time?
Well, I ask shareholders to be patient. We've got a great prospects ahead of us, a very exciting year. We've already started this first couple of months of 2018 with record levels of leasing again. So I said last year was a record. In the first 2 months of this year, we've already beaten the first couple of months of last year. So it looks like from a leasing point of view, we're absolutely out of the track and coming at this very hard. So that's encouraging. Then as we go through the year, excitement looking around the commencement on site at Brent Cross, one of our major developments, and we go on site in France at Cergy for a major development there in the next few weeks. As I said, a few other disposals, but a lot ahead of us.
A lot ahead. And just to hone in on those record leasing numbers, the highest in 17 years, as you've just told us. I mean, I understand you've got a lot of new clients that have come on board. I mean, have you had to be a little bit more flexible in the kind of deals that you've offered them, given the difficulty of the macro environment there in the UK?
Well, the retail market continues to evolve, no question. So we work with our retailers to get the right deal for them. So in some cases, a little bit more flexibility. That might be a slightly shorter lease or a break clause, but on the whole, they're paying market rents. We're paying, a relatively modest incentive to bring them into our space, and haven't really seen any change in that environment for a good 12 months now.
David, I can't let you go without speaking about the threat of online retail to brick and mortar shopping centres like yourselves.
Well, look, UK has been working with online for decades. In fact, we're the most highly penetrated online market in the world. At about 18-19% of all sales are online. It's nothing new. We're very much working with it as a multi-channel environment with our retailers. And don't forget that online can't work without physical. A lot of physical space pushes sales online. People might order online and collect in store. So we see it as an evolving multi-channel market. The important thing is we own the very best retail where retailers and shoppers want to be.